Hello everyone and welcome to today's morning report with me, Richard Perry, market analyst at Hantec Markets on Thursday the 17th of August. We've got a relatively sort of dollar negative move that we've seen in the wake of the Fed minutes. It seems as though that the Fed is increasingly concerned about what inflation is doing in the States and the fact that it continues on this sort of downward trajectory throughout 2017 and previously Yellen and the committee have sort of suggested it's transitory. However, minutes suggest that increasingly the committee are sort of on the brink of moving back from its potential hiking in the wake of the fact that inflation continues to disappoint. So unless it starts to demonstrably turn around, that could well put December hiking off the table. And that has hit the dollar, and that has hit the dollar overnight. Let me show you. Where are we looking? Bang. We see the... okay, that's probably best to do that. The dollar sort of fell away into the close yesterday, having sort of looked initially as though it's coming much stronger. A little bit of a rebound today, but what we have seen also is treasury yields mainly sort of falling away on the 10-year and the 2-year yesterday. As I said, a little bit of support coming in for the dollar today as the treasury yields have picked up a touch. And that's come as the euro has been weaker rather than the dollar being stronger, because the yen has been outperforming as well. But that is certainly coming through on these on the board here, where the euro is sort of falling back again, following on from again the support coming in or maintaining around about that sort of 17.10 mark. It's interesting that gold is also a big rallier off the back of these Fed minutes. So gold and yen especially. But also what we saw yesterday was the equity markets just sort of pulling back into the close, and that sort of came through in the Asian markets, and also the caution that we've got on the back of that is reflected in the European session today. My chart of the day is the DAX, and I'll talk about how the DAX is sort of pulling back from a key level as this has sort of happened. Yeah, some interesting moves that we are seeing on the back of these Fed minutes is this sort of, again, the end of a little bit of a dollar rally that starts to sort of see the dollar just drifting off again, which has been tending to what we've been seeing in recent months. So pretty much that's what we're looking at today. Now we've got some data today. We've had the UK retail sales. This is sort of a hat trick of UK data coming through the markets in recent days. UK retail sales dropped back to 1.5% on the year-on-year ex-fuel, back from 2.8%. But that was mildly ahead of expectations. But the fact that we sort of dropped back quite significantly is not great, and generally speaking the sort of reaction has been fairly muted on sterling on the back of that. Now later this morning we've got the EU Eurozone inflation. That's expected to be 1.3% again, and on the headline, and 1.2% on the core. And then later on today we've got jobless claims 130 for the States, again around that 240 area, and then we're looking at the Philly Fed, again holding up around about that 18-19 area, which was a strong number last month, and then the industrial production data 0.3% plus 0.3% on the month for industrial production, and capacity utilization are mildly ticking higher to 76.7. So my chart today, that the DAX. Now the DAX, as I said, has rallied to its key level. This key breakdown. This breakdown of I've got on this DAX chart 2316, which was the low, but it's generally around that sort of 12300 level. 12316 level, and it's generally around that sort of level where the market has been sort of pivoting in the last sort of 8 weeks or so. And again, it rallied towards that. You've got the downtrend from that June high, which also sort of is a confluence level around that sort of 12,300 level today. And the market's just dropping away. This comes as the RSI hit 49, backing off from there. Is that sort of the MACD lines sort of dropping back as well, or failing to really sort of take traction. So is this another rally? The rallies that we've seen since late July, all failing around this sort of 12,300 level, between creating a resistance band 12,300 to 12,340. Is it another rally that's going to fail? The bulls are sort of asking the question today, and they're sort of dropping away. You can see the hourly chart whereby we've sort of hit 12,300. We've dropped away again. That doesn't look great, does it? Just rolling over the MACD lines. Sell signal on the hourly. The RSI dropping below yesterday's low. Oh dear, that's not great. And the stochastics as well, sort of beginning to gain traction to the downside. So, could it be again another rally that's about to fail? You're looking at your support levels. Let's go back on the hourly chart. Broken just in the last few minutes, broken below the to a new day low, which again sort of doesn't help. 12,157, yesterday's low, according to the hourly RSI. That's likely to be retested. You could also argue the recovery uptrend of the last few days has it been broken. So yeah, it's certainly doesn't look great for this recovery anymore, and the bulls look to be running out of ideas once again. So I wish you good luck in your trading today on the DAX, and I'll speak to you later. Thank you.